Hey, it's Jeff Garber, mortgage expert, mortgage interest rate guru. Today is Wednesday, March 30th, 2022. This is your weekly mortgage interest rate update. And as a disclaimer, if you are looking for a rate quote, please reach out to a licensed mortgage loan originator. What I'm doing is just showing you what's going on in the markets and using an average for where rates are. These are not quotes. Just want to be clear. So, as you know, if you've been watching all my updates, you know that mortgage rates come from the bond market, specifically mortgage-backed securities, which is what you're looking at right now. And the chart is pretty simple to read. Green is good day, red is a bad day. And the thing to know is as bonds go down in price or sell off, mortgage rates going up. So, happy to report that today, if you look over here, you see a green candlestick. Yesterday, you saw a green candlestick. Monday, you saw a green candlestick. So far this week, it looked like we've stabilized a little bit and we're getting some of the losses back that we incurred from last week. You know, the damage is done. You know, rates did jump up pretty quickly over the last few weeks, and especially since the beginning of the year. But this is a good little trend right now. At least it's given us a little break in the action where we finally don't have to say that rates are continuing to rise and keep going up. At least right now, for the moment, we're gaining some of it back. It would be really nice if we can get a little bit more of it back, meaning rates come down a little bit more and maybe go sideways a little bit and allow us to relax and get our footing and be able to say, hey, rates are right around here for a little while, and people don't have to panic as much. Like, I got to buy right now because rates keep going up. So we're looking for some stabilization. Again, though, the trend is still not our friend totally. We have a lot going on. If you've been following these updates each week, you know that the main reason right now that mortgage rates are going up is because of inflation. Inflation is the kryptonite to the bond market, specifically mortgage bonds. So if there's inflation, and inflation is going to keep rising, mortgage rates are going to come along right up there with them. Now, as we keep saying, the Fed is trying to get ahead of inflation. They do that by raising their short-term benchmark rate, which doesn't always equate to mortgage rates rising. They did raise their benchmark rate a couple weeks ago, and we did see mortgage rates rise along with it, but we're in the beginning of the Fed cycle, so we have to let this play out. They're going to be probably increasing their short-term overnight Fed funds rate by a quarter or a half a point at each of the next 6 meetings for the rest of the year. And if history repeats itself, these Fed hikes usually mean that inflation comes down, and usually mortgage rates come right down with them. So for the week, we can take our foot off that panic button and enjoy the last few days of gains or improvement in the market. We're hoping that continues. We're hoping it goes sideways, and I will be back next Wednesday to let you know what's going on. If you have any questions or comments, please ask below. And if you'd like to speak with me and set up a free consultation as well, you can do that. So look forward to hearing from you. Look forward to seeing you next week. Thanks. Take care.